How do you guarantee that you can make money in the stock market? Well, while there's no way to 100% guarantee you'll make money, you can significantly improve your odds by being a little bit of a contrarian. Instead of focusing on the stocks that everybody's buying that are extremely overvalued because everybody's buying them, instead focus on the stocks that are undervalued, the stocks nobody wants to buy, and then just hold them because sooner or later things will turn around. Those stocks will become popular once again, and your portfolio will most likely see some profits. We've been doing that in a portfolio called the Millionaire Club Challenge that is posted on YouTube, Rumble, and a few other platforms. And in that portfolio, there were a couple of stocks we bought that were completely beat down. Nobody wanted to buy them. Even when I did buy them, people said I was crazy. But now they're starting to pay off. One of those stocks was 3M, ticker MMM. And one of the issues that a lot of people had with this company is the lawsuits that they were dealing with. But news came out over the weekend that 3M was very close to settling a $5.5 billion claim on their earplugs, causing hearing loss, as well as a number of other hearing problems. In total, there were more than 300,000 claims that were filed against 3M. Now, it's important to understand this was not a class action lawsuit, but rather it was 300,000 individual lawsuits all filed against 3M. And what the judge in this case decided to do was combine all 300,000 lawsuits into a single lawsuit known as a mass litigation and just try them all at the same time. So in one fell swoop, 3M is able to settle on all 300,000 lawsuits at once. Now, the final step here is that the 3M board will have to vote on the multi-billion-dollar settlement, and that is expected to take place here very soon. Now, this is good news for 3M stock because the one thing that really held people back from buying this stock was concerns over the lawsuit. Now that the lawsuit is settled and we're in the clear, guess what? 3M is finally starting to rise. 3M stock was up 5% on the day. Now, of course, when it comes to buying undervalued stocks, it's not just 3M that is finally in the clear and now starting to rise. It's not just 3M that's starting to have this turnaround where money is starting to come back into value stocks as it starts to leave the mega cap tech stocks a little bit. Verizon is a company that I bought in my personal retirement portfolio that I let people in my coaching program know about, and another Verizon dividend hike is likely on the way. Morgan Stanley expects the telecommunications company to raise its dividend by about 2% in line with what it did a year ago. Verizon historically announces dividend increases around this time of year, and last year marked the 16th straight year of hikes. Verizon is one of those several high-yielding telecommunications companies, names whose dividend yields exceed those of their 10-year corporate bonds. Verizon's current dividend yield is sitting at about 7.8%, and a 2% increase should get that close to 8%. Now, I bought Verizon at about $31.60 when it had a major sell-off over unfounded fears of lead wires. It has since recovered, and the stock is currently trading at about $33.55, or about 6% up from where I bought it. So not only have I made 6% on this stock, I'm also getting a dividend yield of about 8%. Another company in a similar boat is at&t, ticker symbol T, and this is also paying a dividend yield of around 7.8%. So these are two more examples of how buying the dip, buying undervalued stocks that everybody's selling and nobody wants, are a way to make money in the stock market by being a little bit of a contrarian. This is an incredible opportunity to make money and something to really think about. It's not always about going after those stocks that everybody else is buying because they end up becoming overvalued. And once you learn how to perform fundamental analysis, you can look at these companies, realize they're overvalued, and say, you know what? There are 9,000 other stocks in the stock market. I'm going to go find others that nobody else is buying. I'm going to go buy those, and I'm going to make money. Because, yes, those stocks everybody are buying go up, but only for a time. Eventually, they fall and get back down to reality. Look at Tesla, TSLA. Tesla is still down over 40% from its all-time high of $414 that it hit way back in 2021. And this is just an example of stocks that rise up on hype, and then when they come down, a lot of people end up losing money. Think about other stocks that ran up on hype, BNGO, or what's another one, NNDM. Stocks like that, they all run up on hype, but then eventually, one day, the bottom falls out and they start falling back down to reality. There are people that bought NVIDIA at over $500 a share. It's currently trading around $450. It's actually lower than it was before they reported earnings. And this happens. Stocks that are overvalued eventually sell off. They eventually come down in price. But stocks that are undervalued eventually turn around and they start increasing in price. So buying undervalued stocks is way safer than buying overvalued stocks. Now, how do you find these companies if you don't know how to do fundamental analysis? Well, it certainly does make it quite difficult. So the best thing that you can do is learn how to do fundamental analysis. And that is one of the most important lessons that I teach in the new course that I'm creating. If you want to check out that course so you can learn how to make money in the stock market, how to find these undervalued stocks so that you can make money without taking on the huge risk that goes along with overhyped stocks that everybody's buying, and you can go find these diamonds in the rough that have a far better chance of going up, then you can go check out the course in the description of this video or the first comment below and just check it out. See if it's for you. I lowered the price, by the way. It's now down to only $349. Well worth it. I was actually out in the streets today talking to some people, and one guy said he was about to pay $1,200 for somebody else's course. And he looked at my course. He said, your course actually has more information in it for only $349. And he just about signed up right there on the spot. It's a great deal. Go check it out. I should have some reviews up by the end of this month to help you out and just help build some trust, let you know that it actually is a good course. But for now, let's get back to some other stocks about today, because I also did an option today that I wanted to let you know about as well. And no, it's not too late to get into this option. If you want to buy this option on Tuesday, you can. It's not too late. I bought a call option today on Hawaiian Electric, ticker HE. The reason is because Hawaiian Electric has pointed the finger at Maui County over their devastating wildfires. And today, the stock jumped by 44%, and it was up another 4% after hours. Now, if you're not familiar with what happened here, there was a major fire out in Maui in Hawaii. It killed hundreds of people, devastating, horrible situation out there. And HE, ticker HE, Hawaiian Electric, their stock dropped from $33 a share prior to the fires down to around $12 per share over fears that the high winds had caused one of their electrical lines to fall, and that had caused the fires. It basically the same fears that they had over the California wildfires a few years ago, when PG Electric was found at fault for causing those fires due to their old, outdated wires. But in this particular case, while a wire did fall where the fire started, the fire company had actually come out and put the fire out. And by the time the actual Maui fire started, the electricity had already been shut off for 6 hours. What this means is Hawaiian Electric cannot be at fault for causing the fire because the electricity was already off. And therefore, it's probably the fault of the county that actually caused this. And for that reason, the stock rallied today, and I do expect it to continue to go up over the next few days. So that is why I bought a call option on HE today. Now, I bought the $15 September 15th call option. And I do plan to hold this only for about 3 or 4 days. Probably sell it by the end of the week on Friday. And that gives me enough time so that I'm not losing a ton of money to theta decay or time decay. And it also gives me enough time for this to actually go up rather than trying to day trade it. So this is the one I did. It's the $15 call option. I don't plan to hold it for long, but you still have time to buy it on Tuesday and maybe sell it on Thursday or Friday when I plan to sell it. I do expect the stock to continue to go up now that it looks very unlikely that HE is actually going to be at fault here. Now, just because some of my trades worked out does not mean that everybody out there is making money. Like we just said, sometimes people just go out, they buy stocks everybody's talking about, and it doesn't really work out. So I just want to show you what's happening with one really popular stock that is going to cause a lot of people to lose a lot of money. And that stock is Bed Bath & Beyond. Bed Bath & Beyond shareholders are left holding worthless stock as the bankruptcy hearing approaches. What's crazy is that Bed Bath & Beyond shares continue to trade at enormous volumes, even as the wildly popular meme stock appears weeks away from being declared worthless. The company's market cap of $152 million essentially boils down to nothing for common shareholders. And that's because in the bankruptcy proceedings, shareholders are dead last to get anything. And unfortunately, the amount of debt that Bed Bath & Beyond has far exceeds the market cap of the stock, which means all of the assets, all the money that Bed Bath & Beyond has is going to go to bondholders, and shareholders are going to get nothing. So by the time these bankruptcy proceedings are over in a few weeks, the shares will literally be worth zero. This would suggest that the current vast swaths of investors trading in the company's stock may be doing so purely on doomed speculation and will be left empty-handed. So Bed Bath & Beyond is an example of why you do not want to buy a stock just because everybody else is talking about it. And you really have to do your research and understand the fundamentals of a company, understand everything that will affect that company's stock before you go buy. Because unfortunately, there's a lot of people who are holding Bed Bath & Beyond stock right now. And in about 3 weeks, their stock is going to get delisted and it's going to be worth zero. Now let's talk about the economic news that came out on Monday, and this is going to be really important for long-term investors to understand because these economic things are going to affect the stock market eventually. First of all, rising gas prices have hit inflation-wary Americans, and the increased cost of gas is making it hard for businesses that have been barely managing inflation for months. And inflation, including rising gas prices, is causing Americans to stop paying on their home insurance. Some homeowners are skipping coverage because they say they can no longer afford the rising premiums. We've already seen auto loan delinquencies at their highest level in about 15 years. Yes, car loan delinquencies, people that are getting their cars foreclosed, is actually at a higher level than it was during the 2008 financial crisis. On top of that, we also see businesses not paying their bonds and filing for bankruptcy at the highest level since the 2008 financial crisis. And now we are also seeing Americans struggle so much, they're not even paying on their homeowners insurance anymore. And all of these problems just show how bad the American consumer is right now. And it's spelling disaster for the U.S. economy in the future. To make matters worse, student loans are emerging from their deep freeze, and interest rates on federal loans restarts this Friday, September 1st, with the first payments due in October. About 60% of borrowers already say they cannot afford to pay their student loans, and they are going to end up not paying on them probably for about a year until they really become due. So again, just another thing that's putting downward pressure on consumers and really, really hurting. All of these things are coming together at the same time, and it's looking like it's going to spell disaster for the U.S. economy. Now, we will get some updated economic data on Wednesday, Thursday, and Friday this week, including the ADP private payrolls on Wednesday, the PCE inflation index on Thursday, as well as the official August jobs data on Friday. And they are expected to show a slowdown in the job growth, and they are also expected to show a decline in wages, while spending has increased. Further, inflation is also expected to start rising once again. All of this bad news for the U.S. economy. Now, I know stocks continue to go up, but remember, earnings have come down. Now, what we're really seeing when it comes to the stock market is we're seeing prices, revenues. Revenues are coming down while stock prices are going up. And what this has caused is an imbalance. As earnings and revenue go down, by the way, earnings are down about 8% year over year this past quarter. As earnings gone down and prices go up, this has made stocks very, very, very expensive. You guys are actually paying a lot more for a lot less. And the stock market right now is at one of the most unaffordable states that it's been in decades. The stock market is the most unaffordable it has been since 2007, right before the Great Financial Crisis. I know, I hate to keep talking about the Great Financial Crisis, but the reality is the economy is just as bad as it was right before the Great Financial Crisis hit. You've got to wake up to this and be honest with yourself and just know that this is coming. Know that September is historically the worst month of the year for the stock market. So just be prepared for a short-term downturn in your portfolio before things historically bottom out in October and we start rising. This is going to be a great month coming up to buy the dip for long-term investors and make some incredible profits. It's also going to be a great month for short-term traders to buy some put options and make some money on the way down. And to show you what I'm talking about, Farmers Insurance announced they were cutting about 2,400 jobs in order to improve profitability. And this is something we've seen a lot over the past few quarters where companies are slashing jobs, doing layoffs, because as revenue goes down, they've got to do something to keep stock market investors happy. So what they do, they cut their costs. And by cutting costs, hopefully these companies are able to cut their costs by more than the revenue goes down. This makes their earnings look good, even though it's a short-term band-aid for a long-term problem. So yes, things look great right now, but all signs are pointing to everything slowing down. So hold on tight, just stay the course. Buy the dips, find those undervalued stocks that have a far greater chance of going up than down. And if you need help with this, go check out the course in the first comment or the description below. And I will teach you how to do this, how to make money in the stock market, no matter whether it goes up, down, or trades sideways. By the way, if you got a lot out of this video, then hit that like button, subscribe. By the way, if you're on YouTube and you subscribed, make sure you click that subscribe button again and click the bell icon and click all. Otherwise, you're not going to get notified when I release my next video. And be a good friend, share this video on your social media pages so that others will know what's going on in the stock market as well. And if you missed yesterday's video where I gave a pretty in-depth update on the economy and what's going on, make sure you watch the last video that I uploaded here.